All right, I forgot to get our intro slide up while people come in for the ad. So we'll be starting in about 7 seconds as people trickle in about 4 seconds now. And there they are. Here they come. Welcome everyone to another episode of Punch Card Investing, episode 48 now. We just keep trucking along, and the market keeps trucking along too. Lots of crazy things happening this week. Big news, not only in the value world with Charlie Munger selling half of his Alibaba stake, or I should say Daily Journal selling half of its Alibaba stake. And meanwhile, I mean, we just got the news today that Elon Musk is trying, or I guess it was yesterday, right? Elon Musk is trying to buy out all of Twitter. So lots of crazy things going on right now. So we'll be talking about that. But before we do that, be sure to check out all the good stuff in the description below. We have our discount link. That's also an affiliate link to Seeking Alpha if you want to sign up for their premium subscription service. They got lots of great content over there about all sorts of things, talking about both of these issues here today. And if you want to sign up for that, we have our discount link there. And then also the same goes for ShareSite, where you can get a discount on an annual plan. You get a few months free when you sign up there. And that's portfolio tracking software. It's what we're using to track the punch card portfolio, which I don't know if it's really seen better days. I just don't think it's seen any good days since we started that portfolio. We like ShareSite over here at Punch Card Investing, and recommend you check it out. You can open up a free account there as well. You can actually open up free accounts with both services to kind of give it a try before you just make sure you use our link. And then Discord's in there as well if you're not there already. Like, comment, subscribe, all that good stuff. All right, let's get into it, guys. What should we start with? The Charlie Munger news. It's a little dated at this point. This
it feels dated, but it's still pretty fresh.
This fast-moving news cycle. It was only a few days ago that we learned that Charlie Munger sold off half. Daily Journal sold off half of the Alibaba stake. What was your guys' first take on that? Was it a shock? Was it like I could have seen this coming? Like, what was your hot take when you first heard about it? Don't all jump in at once.
The amount of shares he sold this time was the same as what he bought in Q1 and Q2, right? Wasn't it? So there was kind of a match of the numbers.
The original purchase?
Yeah. The original. So he had the original, he doubled that, then he doubled again, and then he halved that. So whatever the last double was. Yeah.
300,000 shares or so, I think.
Yeah.
Yeah, it definitely caught me by surprise. Yeah. It makes sense why there was so much happening in the Twitter sphere about this.
The question is why. I'm pulling up my screen right now so you can take a look at it. I got to share my screen first.
Well, I will note Charlie Munger stepped down as chairman. What was it? A couple days before this 13F had to be filed. So there's always going to be speculation out there. People like conspiracy theories, right? There's speculation that there was a coup internally.
Yeah.
And Charlie got ousted, and the person who was in charge of the investment portfolio was like, we got to get rid of a lot of this Baba stake. It's just too risky. So that's making the rounds.
That seems plausible. That was my knee-jerk reaction. It's somehow linked to him stepping down. Maybe he was the odd man out, and even though he obviously has a significant stake in Daily Journal and has plenty of sway, maybe it just wasn't worth the headache for him, and they decided to do that. I don't know. It seems like a pretty good case that it's linked to that. But
I might be wrong here, but I thought even with him stepping down, he was still in charge of the investment portfolio.
Yeah, it mentioned that. Yeah,
he is. Yeah,
it's not like he's out, which is what some people kind of made it sound like. But it's a bit of a coincidence, that he's stepping down as chairman right as this happens after they had been aggressively buying into Alibaba. So it just seems like pretty coincidental timing.
Yeah, I'd be curious to know if he has kind of sole reins over the investment portfolio, or if that responsibility has shifted at all with this kind of restructuring.
It's a good question.
But as far as I know, the board members are all pretty like-minded to Charlie Munger anyway. I find it pretty unlikely that they would be so against this Alibaba trade that they forced Charlie Munger into, or encouraged Charlie Munger to step down just to exit half of a position. I think it seems like a bit of a stretch.
Yeah.
Well, there's also the fact that some of these foreign shares were bought on margin, right? So that could have something to do with it, wanting to kind of retire that.
There's been a theory of tax loss harvesting as well.
Yep.
Taking a card out of the Monish playbook. Trader Monish is Charlie Munger is now a day trader, as we can see. So maybe it's a tax loss thing. It could be. It's hard to. One of the obvious challenging things with cloning is you don't really know what's going on for at least part of the portfolio. There's a lot that we don't see with Daily Journal. So maybe they rotated this into something else and we just can't see it, a foreign holding. Some people have said the Hong Kong version of Alibaba, which would be pretty weird if you ask me. If that was the case, why wouldn't you sell the whole thing? And also, what's the big advantage of doing that anyways? They're both part of the ADR structure. So
they're both VIEs, yeah.
Yeah, sorry, not ADR is the one that's traded in the US, but the VIE, the variable interest entity or whatever it's called. So it's not like you're getting an advantage there.
But no, you could get the tax loss from the Baba ADRs and then buy into
I don't
the
know
Hong
if
Kong
I don't
listed, right?
think that would be allowed because it's
I would
technically
assume that's illegal.
Yeah, because it's technically the same thing. I mean, they're not the same thing. They're different entities.
They're different.
But I don't think the SEC or the IRS would look at that favorably. But yeah, I don't know. The investment experts would know better than I would on that. But I don't think that would be allowed because it's too similar. You can't just roll like from one S&P 500 fund into another and then say, hey, it's a different thing. It's like, no, we see what you're doing here. You can't just avoid the taxes that way. So as far as I can tell, I don't think that's what it would be. So I guess maybe.
Well, I'm sure he's going to get questions about it at the Berkshire meeting. Whether he'll address them or not is probably unlikely, but we'll see what happens.
Yeah, that Charlie being not cryptic, that would be great about his own holdings.
I think at the Berkshire meeting, he'll be purposely avoiding that question, being that it has nothing to do with Berkshire Hathaway whatsoever. But I'm sure he would get asked that. I don't know the filter they're going to have on questions this year, but I hope he gets asked and I hope he answers. But
wonder if our man Tom will get to ask a question. That's what he could ask.
But yeah, with changing shares to the Hong Kong, I think that's pretty unlikely. There's nothing that's really changed between the past 12 months of why you would want to hold the Hong Kong shares rather than the ADRs.
Right.
So I don't see why he would make such a big change in a very short time period, considering he bought ADRs as little as, 3 months ago.
Yeah. And he still holds half the position. It's not as though you think he would roll the whole thing in if he thought it was a great idea for whatever reason. So yeah, I'm with you there, Frank.
What are the chances that he doubles the position next quarter?
That would be something.
I'm not going to put anything past him at this point.
I think it would have to fall first, well below whatever their basis is now. I'm sure it's still below what it actually is. We can't see that here. Reported price of 108. So, if it falls to 80 again, then maybe you might see more.
If you had to make a bet, what do you think is the reasoning? There's all these speculation around there. What do you think?
I want to say I bet a lot of the management team wasn't comfortable with some certain amount of margin, I would guess, and they maybe wanted to wind that down a bit. That'd be my guess. That's complete speculation. I don't really know, and no one really has any real context yet. Maybe we'll get more, maybe we won't. But I bet it's something having to do with that because they were buying very aggressively and taking out debt to do it. So maybe they just wanted to kind of unwind that a bit and have the dry powder ready for something else.
Yeah, that seems plausible to me. My bet is on some kind of tax benefit.
Yeah.
It's
probably a combination of a bunch of things. Because I doubt it's just one reason. Because they still have half the positions. I don't think it's because they hate Alibaba. It's probably some grander portfolio construction thing.
Like Charlie has no activity for like 10 years, and then he has this activity, and everyone's like, "What's going on?"
Yeah, that's what was so shocking about it.
Don't let them know your next move. Yeah,
yeah, right. It's a head fake. He's trying to get the price to go down more, so you can buy back in low. Anything else on this Charlie Munger situation?
I like this quote from Tony. Why don't you pull that up?
Mm-hmm. Is it pretty recent? Oh yeah, down here.
yeah.
When the facts change, I change my mind. Yeah, there's no evidence that the facts have changed, but obviously they could have.
And he called it a cash equivalent, right? When he was first buying.
He did.
Yeah.
So maybe he's into something else. That's a better cash equivalent.
Well,
it hasn't turned out to be a very good cash equivalent.
Per the April Fool's episode, Karan, you told us yourself that SPACs are a vastly superior alternative to cash, specifically Pershing Square Tontine Holdings. So maybe we'll see that next quarter. Charlie rolls it into a SPAC.
What if Charlie just needed the money to help Elon to like take Twitter private? Never know.
That's a great segue, Karan.
Has Charlie ever called Twitter anything like rat poison or one of his things that he says?
I'll look that up. I'll see if Charlie's mentioned Twitter.
I wonder if he'd have a quote on Twitter, assuming he's ever seen it or been on it.
I doubt he's ever really considered Twitter.
Same, but because of that, I doubt he's ever considered crypto, but he said some bold things about it.
Considered crypto. He's got some choice words about crypto.
Oh, and I mean, like he was actually going to invest in it, or like, oh, this is an opportunity. I think he knew from the get-go. Like,
it was funny watching Warren Buffett's interview with Charlie Rose. Warren said he doesn't know how to use email. Wow, that's one thing not to know how to use a smartphone, right? That's a whole nother level. That impressed me.
But he loves Zoom, right? He loves the Zoom.
Yeah, I don't know. He must use Zoom.
Yeah, I don't think it's fundamental. And as far as we know, it's not rolled into another position, at least not a U.S. listed one. Maybe it's a foreign holding somewhere,
right?
And we'll never, and the world may never know.
We may never know.
That's the frustrating part.
I think one of the best takeaways here is the somewhat problematic aspect to cloning, where if you really did buy this as a pure clone, then and you have no reason why you exit this position, what do you do? You've got a lot of time that could go by before you actually know why Charlie exited this position, whether he's going to sell more or not. Which is the importance of building your own conviction in any stock that you buy. I know, like, although it's shocking to me and I prefer to see him not selling, it really doesn't change how I think about Alibaba whatsoever, which is, I guess, the point you want to be at. If you are getting your ideas from some of these super investors, at least.
Yeah, that was basically the thesis of my the video I posted today. Was just that is that this is a risky run with cloning. You have this. What do you do here? This is like a half half sell. So like if you're just trying to totally copy, like what are you going to do? You're going to trim. You don't know what truly this allocation is in the whole daily journal portfolio. So you can't really do like an allocation thing necessarily. So just blindly copying can be extremely awkward in these situations. So I echo what you said, Frank, that you really got to build your own conviction in whatever you're investing in if you're going to have long-term sanity and success with it.
Yeah.
It might be that.
How likely is it that you think Charlie bought into Tencent or Prosus?
Well, first of all, I mean, I'm sure Charlie has been talking to Pabrai for quite a while now. I don't see why now would be some kind of, swap opportunity. But I think it's fairly well. So I think Guy Spear was speculating on this in terms of Munger and Tencent, and Charlie is not a fan of gaming, right? And that's a fairly large activity within kind of Tencent's umbrella. So for that reason, he thought Charlie might not be interested in Tencent.
Fair point.
Any thoughts on that, Frank?
I couldn't see him buying Tencent. I really see no reason why he'd be wanting to add into another Chinese position. There could be any number of names of stocks he could be interested in. I think to speculate that it's Tencent is a bit of a stretch.
Isn't Tencent dissolving their streaming service for gaming, the Twitch of China that they control? Do you guys know anything about that? Earlier they were going to do the whole merger with Douyu and Huya and then merge that into their business. But now I think they're just dissolving the entire stake. Something like that. I mean, I didn't really look into it, but
yeah, just a week ago, Tencent to shut down its game streaming service, Penguin Esports.
All right.
I don't know. They're doing a lot of structural changes, like spinning off JD and also dissolving this.
A lot of buybacks taking place too.
True.
Day by day. Which is good to see because a lot of people kind of speculate that Chinese investors or Chinese companies can't buy back shares. But we're seeing it happen at least, which, yeah.
Like legally, they're not allowed to buy back shares?
Well, yeah, there's always this narrative around not being able to return capital to shareholders for Chinese companies, and that they say buybacks will happen and they never really do. And for Alibaba, that has been the case before, but Tencent are buying back shares at least.
We got a good question here from Incurvis. And anyone thinking of trimming or exiting Baba after this move, or has it changed conviction? Frank, you said it didn't. Would you buy more if prices go down to 75 again?
Definitely hasn't made me want to trim or exit Baba whatsoever. Hasn't changed my conviction, and I probably would buy if it went down really low again if I didn't have better opportunities. I like to stay fully invested, so if I don't have another idea, I'll start to look to add towards other positions in my portfolio, whatever I think is offering the best returns at the time. So possibility I add if it gets really cheap again, but not something I'm planning to do anyway.
I'm pretty much on the same page on all of those items, so nothing more to add there.
I've been kind of adding to K-Web, so the ETF that's just broadly invested in all Chinese equities, like internet giants. So been adding that as a position.
You're exposed.
What's the expense ratio on that ETF?
I don't know, like 0.7 something, 0.6, 0.7.
How many holdings are in that?
I'm not sure. I think 40 something. I think.
Okay.
I know the way I see it, like a lot of the Chinese companies they've got a lot of cash. They're all doing buybacks.
Yeah.
The entire space seems very, like it seems like a good hunting ground, provided that, again, like regulation doesn't come and destroy it even further. So.
Yeah, of course. That's always the caveat.
Yeah, it definitely is a cheap market. I guess you're making the bet whether it's rightfully cheap or an inefficiency at the moment. I'd lean towards some type of inefficiency in their market overall, but
fear.
A lot of other people will say it's rightfully cheap. So that's the bet that you make, I guess. And probably being diversified into it with that ETF is the smartest way to do something like that, considering it is the whole market that seems to be cheap, not just specific companies here and there.
Yeah. That's well said.
Go for the basket bet. Yeah.
Brad, any honestly, and you've been stoic this whole time with all the Baba stuff since Munger initially bought in. Any thoughts?
It hasn't changed anything for me.
Yeah.
So
stoic Brad.
holding firm.
Good question. And I saw one more, just one more thing on the margin. This is what I thought too when we heard about Munger dipping into more margin, or Daily Journal, I should say. I use them interchangeably, Munger and Daily Journal. But Buffett's always counsel against debt. If you're smart, you don't need it, and if you're dumb, you got no business using it.
I think it's probably great advice for the vast majority of people.
Yeah.
Yeah.
I feel like there's a part missing where it says that, if you get 0% Japanese yen bonds, then you're dumb to not accept it.
Right.
That might be missing.
And also look how it's worded. If you're smart, you don't need it. It doesn't mean you can't use it. There are obviously risk associated with it, but he's not saying never to use it. But unless you're dumb. If you're dumb, you have no business using it.
Yeah, I don't. You guys
time will tell who's dumb.
Do you guys know the terms of that margin debt at all?
Tom did. It's pretty favorable compared to your average margin loan.
Linked to the dividends from the bank holdings or something, right?
And it's like it's not callable or something like that. It's
non-callable preferred debt, something. Yeah.
Which is why some people mentioned that the reasoning for selling Baba could be that they're planning on exiting the Bank of America position as well. But that's just further speculation, just because the leverage is tied to that in some way or another. But
that would be something.
I think there was a comment about that earlier too. But
wasn't Berkshire aggressively buying Bank of America? So was Lilu, right? I think, or maybe not recently, maybe like 2 quarters back, but just
he has a large position, but I don't. Yeah, he was buying some, maybe 6-9 months ago.
Shall we talk about?
Let's talk about Elon.
Is it the elephant in the room right now in the finance world? Elon trying to buy a $40 billion tech company just in one fell swoop.
Poison pill in the room.
Now poison pill in the room. So to set the scene, if you haven't heard what's happened in the last, I guess it's been a week and a half. Well, back in March, Elon bought 9-ish% of Twitter silently, and technically didn't disclose that when he was supposed to, but now has disclosed that. Was about to join the Twitter board and was going to take it in a new direction, or was going to try to. He's not a majority holder, but he was, I think, one of the biggest, if not the biggest, single shareholder. So he's going to join the board. Then he decided against it and has now said that he's made an offer to buy the entire company at $54.20. That's right, $5,420, and to buy 100% of Twitter. And people don't know what to make of it. What do we try to make of it? Because that's a big swing.
Well, he talked about it. Did any of you see his interview with Chris Anderson through TED?
Yeah, the TED interview. Yeah, that was quite good. I
was very impressed by that.
Yeah, I always like how candid Elon is compared to some of your other tech moguls.
Yeah.
What was it like? I haven't watched it
yet. He really got into his higher level thinking on Twitter and what he's going for, and he made a lot of arguments about free speech and trying to and transparency and trying to open up the algorithm to the public to allow them to tinker with it, or suggest edits, I should say, not really tinker with it directly. If something is not being pushed, that you want to see that disclosed, and kind of just opening things up, and then being more against censorship than maybe the current Twitter management. That was kind of his overarching reasoning as to why he would want it, or I should say, it's the overarching direction he would want to take Twitter in. At least that's what he's saying. If he were to control it.
Yeah, he thinks it's really important in terms of human progress. It's kind of the digital town square in a sense, and just to have it, open in a sense, and so everyone can see what's being filtered, what's being censored. It's kind of what he's pushing for.
Yeah, and he posted his SEC filing, which this thing is weird, but it's kind of great.
It's from 2 days ago.
And where's he like included his like letters or messages to them.
His correspondence.
Yeah, it's so like I invested in here. I don't know if this is easy to read. Yeah, there. I invested in Twitter as I believe in its potential to be a platform for free speech around the globe, and I believe free speech is a societal imperative for a functioning democracy. However, since making my investment, I now realize the company will neither thrive nor serve this societal imperative in its current form. Twitter needs to be transformed as a private company.
That in itself is insane that in a couple of weeks you've noticed this huge difference in your investment.
Yeah.
Since making the investment, you've suddenly realized that won't happen.
As a result, I'm offering to buy 100% of Twitter for $54.20 per share in cash, and that's how you say it, by the way. It's $54.20. A 54% premium over the day before I began investing in Twitter, and it's run up since he made his initial purchase in March, and a 38% premium over the day before my investment was publicly announced. My offer is my best and final offer, and if it is not accepted, I would need to reconsider my position as a shareholder. Twitter has extraordinary potential. I will unlock it.
The fact that he threatens to sell his shares if the deal doesn't go ahead is insane to me as well.
10% of the shares outstanding.
Yeah, he plays by a different set of rules, Frank.
How he like something with the SEC hasn't come up yet is baffling to me.
There's already the issue that he didn't disclose his initial holding, but that's kind of, dare I call it, nominal. Like,
but even like prior to this Twitter stuff, some of like almost pump and dump type thing. It's insane.
It is nuts. How this is like the epitome of like FU money, just doing things because almost doing things as he can, or really just because he wants to. Like, this is something he's interested in. Clearly, he's spending a lot of mental energy towards it, which you think would be stretched.
So it was funny in this TED interview, he was asked, is there a plan B if the board rejects your offer? I said, yeah, there is.
I wonder if that's actually articulated. He didn't go into any details.
He didn't talk about it, but he said there's a plan B.
This is another like exhibit he attached to this filing. I guess this was like a voicemail. It says voice script. I don't really know what this means. It says, best and final. I am not playing the back and forth game. I have moved straight to the end. That's a great line. It's a high price and your shareholders will love it. If the deal doesn't work, given that I don't have confidence in management, nor do I believe I can drive the necessary change in the public market, I would need to reconsider my position as a shareholder. This is not a threat. It's simply not a good investment without the changes that need to be made. And those changes won't happen without taking the company private.
This is missing one thing. Funding secured. One line.
Didn't he say that? I feel like he said that at the TED interview that came up.
Did he?
Yeah. And he like was adamant that the original taking Tesla private at 420 funding secured tweet, he was adamant that it was legit, but and proceeded to complain about the SEC after that. Elon hates the SEC.
Do you guys have any take on, Twitter as a public company versus a private company, in terms of its value to society as the public digital town square?
And would it make a difference if it's publicly traded?
Yeah, if one of those is better than the other.
One of my thoughts when I was first invested in Twitter was that at around 35 billion, one of the floors would be that a private equity or an individual buyer would probably come in and absorb the company.
Mm-hmm.
That was one of the considerations I had when I was invested. Pretty much what's happening, and I think it makes a lot of sense if it's a private company because it's got a global presence, pretty much almost like Facebook. I know some would, disagree with that.
No, they got a lot of users for sure. It's big.
Absolutely. And they've got a lot of influence, especially in developed nations, I think. You've got world leaders openly talking. I mean, that's a powerful platform to control. So. And if it's private, then you don't have any shareholders to report to, which is fantastic.
I don't know how it is for you guys, but I feel like it's become whenever we get like crises, especially like right now with Ukraine, it's a go-to sort of news source for better or for worse, just because it's so fast and you can get like little bits of information from the source in many cases, and that's powerful. So that's never really been the issue. It seems it's how do you actually make money? Because this thing does not make money. It's at least not like you would expect it from compared to something like a Facebook, which just prints cash. Does it need like a rework, like a fundamental rework? Not just making things transparent, but
it hasn't changed since like 2013. Twitter's pretty much been the same. Like the user experience has been pretty much the same. Yeah. Kind of feel like it's like a bit like eBay, you know, it's like, although it's clunky, like people can't stop using it. Like,
so pull up Boz comment here. Twitter cannot be private. So clearly near the bottom, clearly it can be private even if it's not generating a ton of profit, because Elon is prepared to take it private, right? So
yeah
that doesn't make sense.
You
need to be generating profit for investors to take it private.
The way it would be taken private is just that one guy has enough of, or not even one guy, but there's like a maximum shareholder limit, I know, to be a private company. I don't know how many Twitter shareholders there are. So as long as you get under that and meet some regulations, then you can take it private again, as long as a majority of shareholders decide, or super majority, whatever it is in the company bylaws, then you can do it.
And Elon actually said in that TED talk, this isn't an economic decision for him. It's not like he wants to make a bunch of money from Twitter.
He's got to be careful saying that, because if he's trying to be a major shareholder, he's now and he's trying to like take over the board or whatever it is. You got to be careful. You can't say like, I guess he's not on the board, but when you're on the board, you're a fiduciary to all the shareholders. So the goal is to make money. So if you're saying I'm not trying to make money, it's like, wait a second. So
he said that about Tesla also.
Yeah, I know, but he's got to be. I don't know. The lines change every day.
It's clearly not his highest motivation to maximize profits for his companies, which is counterintuitive that he's the richest man in the world, right?
Yeah, at least that's what he says.
Like, well,
if you can fill a hole, like and like patch up a need,
solve big problems,
right? Then the money comes, and he's and he already has so much money that like what's another billion to him? like so it's part of the FU money thesis.
There's also the question of how he actually pays for the $40 billion offer, or whatever his offer was, since there's always this narrative around all his money is in Tesla shares.
Yeah.
And he did sell some Tesla shares, but not enough to acquire Twitter fully. So
I think
if the deal goes ahead, does that mean Tesla shares get sold?
I think he's leveraged his shares a number of times in the past to buy like houses and stuff, like big houses, not billions of dollars worth of real estate. But so he could leverage, he could sell. He didn't elaborate when he was asked this in the TED talk, or it's not a TED talk, but like the TED interview. But he said he had the means, which sure, based on net worth, he has the means. But yeah, so I do kind of wonder.
That's like a Tesla equity line of credit, a T-lock in this case.
That's great. That's great. Well done, Brad.
I feel like there's got to be more to this deal than Elon's making it out. Like there's got to be a long-term picture to this. Because it feels like he's not serious, firstly. He's just doing so many weird things within this that makes it feel unrealistic and not sincere. A lot of trolling within, even just the way he's been on Twitter. It's all very weird. I feel like it could be a situation of we're playing checkers and he's playing 3D chess or something.
But then what's the goal there? He seems serious to me. Weird, and
I think he's just a quirky guy, Frank.
Yeah,
he's just a quirky guy.
I totally see what you're saying, Frank, with the ridiculous things.
Why would you acquire Twitter? Like, he's started all of these incredible companies. Why just buy Twitter outright? Like, what's the play?
Twitter's got a lot of influence. I mean, throughout society. Why would you not want that?
Well, Frank, I think you're asking is he already has plenty of projects to work on, so why add another? Is that kind of the question?
Like SpaceX and Tesla are his big things. Then you add in this Neuralink and whatever
Boring Company,
all of that stuff. Like, what is the benefit of now this takeover of a public company that really is nothing compared to Tesla anyway, regardless of how you think about valuation, any of that? Like, you have. What's the play? Like, it doesn't make sense to me.
I think I think it's more that he's a starter. Like, it's in like the entrepreneurial sense. He likes starting things and the build phase. That's my guess. And so he's just he's naturally attracted to these sorts of things, and they just have become bigger things as he gets more money. I bet it's something.
So why not start your own platform?
I don't know. This might be the easier way.
That's a lot more work.
Yeah.
Yeah, competing with Twitter is difficult.
Yeah. Anyways,
I feel like he's got one company for every kid that he's got. And he's got a new kid, so he got a new company to match that.
It's one of his kids' inheritances. Twitter is.
Yeah, he's got a new kid, so done.
We should talk about the poison pill, because this is kind of a good lesson.
Let's talk about the poison pill. Jack, you're our in-house lawyer,
in-house counsel for Punch Card Investing. It's this is a good learning moment. Think whatever you want about the deal, whether it's a good idea, bad idea, the ethical questions, whatever. But Twitter doesn't want Elon to do this, since they've just announced they're starting this. They've issued a poison pill, or I don't know what the correct terminology would be there. They have a poison pill ready to go. And let me pull up the announcement here. So it's this limited duration shareholder rights plan. So if certain things happen, then existing shareholders would have this right to do something. And that something is right here. The rights plan is similar to other plans adopted by publicly held companies. Under the rights plan, the rights will become exercisable if an entity, person, or group acquires beneficial ownership of 15% or more of Twitter's outstanding common stock. So Elon has about 9 to 10% right now.
Yeah.
So if he gets over 15, then this thing triggers. In the event the rights become exercisable, so if he gets over 15%, each right will entitle its holder.
Excluding Elon.
Yeah, excluding him, to purchase at the then current exercise price additional shares of common stock having a then current market value of twice the exercise price of the right. So basically, you get to buy a bunch of discounted shares. And
so, am I thinking about this correctly? If this took place, it would suddenly make Twitter as a company twice as expensive for Elon.
Basically. In an instant, and that's why it's called a poison pill. In that, if you swallow this pill, it's gonna be bad, and you're going down with the ship, sort of thing.
The only thing that Twitter's been good at doing in history has been diluting its shareholders. So.
Yeah, I was gonna say,
right up their alley.
Yeah, I had a buddy who was saying like, oh, they're gonna like dilute Elon. I'm like, they're probably just gonna dilute the shareholders anyways. Like, it's just par for the course. But I wonder if is there a way around this for Elon, or for anyone, in any
to be determined
scenario?
What's that?
The white knight scenario might happen. Some other tech company might come and buy out Twitter. It'd be cool if Google goes and buys Twitter.
Oh boy.
Could see that happening.
I wonder what sort of antitrust issues would come up.
Right.
So the thing is, he still is a 9% shareholder, so he already has a big.
He's the single largest shareholder.
Yeah, he is. I wasn't sure if he was, but I knew he was close at least.
Oh, sorry. The Vanguard Group may own.
They're at 10%. Yeah, they're at 10.3%.
But he's the second largest, right behind them.
Behind the fund.
Behind the largest funds in the world, right?
The only thing, when does this expire? Did it say? Not in here. Oh yeah, it'll expire in next year. So 1 year. So they have the shield up for 1 year, and I guess they could just renew it. But that is an obstacle for sure. what to make of the poison pill.
Yeah.
I won't be surprised if we see like private equity get into this, especially because there are already like Twitter has Elliott Management and Silver Lake still as investors. So
I wonder if
that's
there's
something.
Is there a price that they would actually be interested in? Like, I wonder what the board really wants. Because I think Twitter's at 40, they're at 45 a share.
I think this was the price that Elliott Management was buying into the company. Like this was like 1 year ago, year and a half.
Yeah, I don't think they'd be happy with the $52 or whatever it is.
Yeah,
54.20
prices. Yeah,
How
get it
could I
right.
forget?
You're out, Frank. Karan, you're out too, right? You guys were both in it at one point.
Yeah.
Yeah, I kind of got lucky with the whole Twitter position. My thesis kind of being, and a buyout was within the thesis, similar to what Karan was talking about. Like it was so cheap at the time with a lot of optionality, such a huge platform of users that is so under monetized compared to anything else, even comparable to it. Like it's pretty incredible that it's such a small market cap for how valuable the company is and how valuable it could continue to be in many different ways. But I'm happy that I made a decent amount of money on that kind of out of luck. It was a bit of a COVID play as well, since I made that bet kind of mid-2020. So it worked out really well when I exited it. And I kind of exited just because I was concerned. I didn't know what would happen. Management weren't really executing. I didn't have a high conviction on it. There was a lot of uncertainty going on. And I couldn't be more happy that I'm out with all this going on, to be honest.
Yeah.
And did you get in touch with Jack Dorsey's far out cousin, Edwin Dorsey? Did he say anything?
I haven't talked to Edwin Dorsey about it yet. No, I might actually have to hit him up.
He was at like Twitter's going to be a 10x in like 5 years. I think that was his.
Wow.
Yeah, when someone asked him about valuation, he's like, "Yeah, it's a 10x. Just buy it."
Edwin had most of his money in, I think 70 or 80% or something crazy in Twitter.
And the rest is in MicroStrategy, which is a well-balanced, diverse.
And then a few little diversified positions here and there. But he has reasoning for investing in the way he does, but I wonder how he feels.
He's early in the game.
In regards to his income and how much he's earning, I think the Twitter position would be almost irrelevant, I suspect.
Are you guys rooting for Elon?
Yeah, I was going to, from our boy Jason.
I generally am.
Generally?
Yeah. I mean, I would like a little more details on what would actually happen. But yeah, I mean, I don't really like the current path for Twitter for a variety of reasons. But
I like Elon and I root for him in everything else. But in this, I'm like, it's just not his thing. To me, I'm like, get out of it. Twitter's already a great platform. I don't want it to be ruined. Obviously, for shareholders, a lot of changes need to be made. But as a user, I'm very happy with Twitter, so I don't want it to be suddenly upturned really quick.
It's a fair take. Yeah,
I feel like Elon brings more of a founder's approach to Twitter than Jack ever did. At least that's what it seems like. Like he actually genuinely wants to make the platform into something better. So
that's a hot take.
That's a stretch. That's what it is.
I don't know, the ownership numbers say it. Like Jack owns like 2%. Elon owns like
he's
9%.
out. Well, he's out like trying to do other things. Jack Dorsey, like
I think Elon's doing a little bit more than Jack, even outside Twitter.
No, but I mean, like I think Jack Dorsey's trying to do like an open source version of Twitter. Like wouldn't that be like a direct competitor? It's something like, I know he's working on some pet project like that, and that would be kind of hilarious that he ends up making like a direct competitor.
But if he puts in as much effort as he did into Twitter, then we have nothing to worry about.
Yeah, right. Sure.
He basically just casted aside Twitter for the longest time, and then
yeah,
that's pretty much why it's been so stagnant.
Yeah, could a few reasons, but I'm sure that's a big one.
Change in management was one of the main thoughts that I had when I was investing. I'm like, okay, this needs to happen soon.
Yeah, the appeal was these activist shareholders like Elliott and Silver Lake being involved. And theoretically, an Elon could be another beneficial thing for shareholders if he had the right intentions, but I just could not be convinced that he does. Like the whole freedom of speech thing that he's pushing is just such a stretch in my mind.
You don't believe him?
Not a bit. I'm not saying like he would be against, like, that's probably part of his reasoning.
Yeah,
I think there's far bigger picture than that in his mind.
Yeah. It's hard to say. We don't have a skadillion dollars. Your priorities change.
We're just eating popcorn on the sidelines. That's what
we are.
The free speech part is a good marketing campaign.
Oh, it's great marketing for sure.
I feel like it's a playbook out of Trump's playbook. Like, just yes, I'm all about free speech.
A little bit. Let's not get demonetized now.
We can't say Trump.
No, that's a bad word on YouTube.
Oh,
okay. Trump did make some comments about he still wouldn't come back to Twitter even if Elon allowed him back on the platform.
Who said that?
Wait, did he say that, or you're saying he would?
No, I'm pretty sure that's been said. I read that.
He's so hurt. He's so hurt by that.
I would definitely believe it.
Well, he created a competitor, right?
Yeah, he's kind of has a vested interest now.
Well, but...
Yeah, and it hasn't done anything, has it?
Well, that was like the crazy SPAC thing, right?
DWAC, DWAC, I think it's a ticker.
The SPAC.
Went on like a rocket ship, and here, I'll pull it up in a ticker real quick. If you guys have questions, we're kind of in a meme circle right now. I hope we can get out of the meme circle and talk about some. What do you guys want to talk about? Let us know in the chat.
We should have had Jason put up 500 Australian dollars to answer the question there.
Yeah, he still owes. He owes Tom.
We missed that opportunity.
Let's see it. I don't even know where this line goes up to. At least 94, but it's higher. I don't know.
It's like 160.
Yeah.
Still a 400% return, pretty much, from IPO price.
But in year to date, since January, it's been flat.
What's the description on this thing?
Does it say Trump's name?
Yeah. Right.
No, because it's still like the SPAC. Description. Because I guess they haven't finished the merger, or I don't know. I've not followed the details of this.
Can't blame you, Jack.
Speaking of SPACs, though, there are a ton out there that are expiring. Because remember, we had this flood of SPACs in the last 2 years. Yeah. A lot of them had 2-year time horizons. So I wonder what's going to happen there. That's a lot of cash that's just going to be, I don't know, returned to shareholders, freed. There's billions and billions of dollars that are going to either have to find a target, which is what a lot of these fee arrangements, ask Chamath, would imply, that you want to get a target. But then there's a lot, I'm sure, that won't get a target. Precision Shorts Hunting Holdings might be one of them. That would be something. For all that,
July, I think July 4th or 5th. Or
that expires this year in July, huh?
Yeah.
I think there's a lot of these busted SPACs that kind of activists probably will or should take advantage of, that they trade below cash value and stuff like that. So there is value to be had there, but it's not a game that I think I'd be interested in.
So there's a lot of regulatory concerns too that would make that more complicated.
Of course.
But yeah, it'll be interesting to see that. This is going to be a big year for the fate of SPACs, I would bet, one way or the other. I don't think it'll be the current course. It's going to be very negative or very positive, I would guess. Probably very positive, given Karan's glowing review that he gave us on April Fool's Day. SPACs of the future.
Starting with the largest one, right? In July.
Yeah. Yes.
I don't know. I think he might. I don't know if he'll be able to get a deal at this point. Yeah.
Yeah, unless one's like already in the works, like to get a big deal like that, yeah, you're gonna need to move fast. Yeah, I wonder what's gonna happen there. Unless he tries to like unlock it through one of his weird deal structure things, move the cash to some other entity, and without calling it a merger, whatever he does.
I
Bill
feel like the
Ackman will
recent
overcomplicate it.
Yeah, the recent stuff that he was talking about, where he's like, I'm not into short selling. I think the reason he did that was, to come across as like a friendly merger partner, not like, I'm going to use this SPAC to take over this and that.
Yeah. He's master of PR.
There's a lot of questions about Micron over here.
What's going on with Micron?
Brad, are you still in Micron, Brad?
I am. Let me check what it's doing now.
Yeah, I'll pull it up on ticker.
It's back, dropping down to 70. Yeah, I'm not doing anything with Micron.
Did something happen? Like
sitting on it? I don't know.
No, any like
They've
fundamental
had
news?
fantastic numbers, right? They've had like record numbers this year.
Yeah.
And I think even the CEO was on
oh wow,
CNBC like 2 weeks back or a week ago. Sanjay Mehrotra.
Yeah, looking at a little bit of a spike in free cash flow. You can't see the last 12 months, but 5 billion in free cash flow versus about 2.5 last year, and that's with some pretty big capital investments.
That's in the too hard basket for me.
Yeah, very technical,
Mm-hmm.
akin to like an Intel or any of the chip makers.
Well, I was curious, Frank. Did you dig into Bonsai's newest purchase?
Can you remind me what it was? I actually don't remember.
Yeah,
I read the letter, so I would have looked
dibs,
at it briefly.
First dibs.
Oh yeah, I had a service level look, and it kind of, seemed not for me.
What is it like? Like an
Pretty
antiques kind of
another online retailer type thing.
Retail,
Antiques thing, which is on par with his last investment in. Blanking on that one now too. I forget. It's like an ASOS type competitor. That he invested in. So he has two kind of in that industry that are cheap kind of online retailers, which a lot of them are cheap, but very.
He's got another one too, doesn't he? In Australia.
Sure. Redbubble. Yep, 3. There you go.
He really likes those kind of that business model, I guess.
Yeah, I guess that's something he understands well.
Frank, are you still into Redbubble or did you exit?
No, I was in and out of that one pretty quick. I had concerns with management and some of the ways they were reporting their numbers in their investor presentations. There were some misleading kind of EBITDA numbers in there. Their incentives weren't great. The founder was kind of still involved on the board as far as I remember, but it seemed like his vision that I did like was less so the focus. It was concerning with some of the things management were doing, but it is even cheaper these days. So I think I had a little loss there, not too bad. It was a very quick in and out position, but it's very cheap now. So if you have faith in management, it might be appealing.
I've got an unrelated question from Thomas here. This is very early in the show. A lot of wonderful businesses like Airbnb and Snowflake are IPOing at a mature stage. I would say that's a little bit debatable, but do you think that this trend will make it impossible to invest in future FANG stocks at the microcap stage? I'm going to push back on the mature stage thing because if I'm not mistaken, I believe Snowflake was coming. Didn't they IPO? I know Airbnb IPO'd losing a ton of money. So I don't know how you can call it mature in that it's a huge company just by valuation, but it's not as though they're throwing off huge profits, if I'm not mistaken there. And I think Snowflake was unprofitable as well. There were a ton of unprofitable IPOs in the last couple of years that all traded for huge valuations. So I don't know if I would call that mature, but it might just be a part of the times we're in with pretty crazy valuations for a lot of companies.
It does seem like there's a trend for these, tech growth companies to stay private, right? There was a number I was digging into the Scottish Mortgage Trust or something, and he was saying in 2012 there were 100 private companies valued over $1 billion. This year there's 2,500 private companies valued over $1 billion.
Unicorns.
So, yeah. So
they used to be called unicorns. Now they're just like what, deer?
Yeah, they're much more common now. So maybe it's a trend.
It feels temporary to me though that you would think valuations would normalize at some point. Maybe they won't. Maybe we're a straight line up forever till we die.
Yeah,
but
the Fed's been reducing the sheet, right? So I think that's
certainly in nominal terms, I don't think it'll go down very much, just because you'll get more currency debasement. But in real terms, I can't imagine that valuations would stay at super high levels forever. There's going to be some sort of crash at some point. I don't know when that's going to be, but that's that. At least if history is any guide, we're going to get some sort of pullback at some point, like a big one.
Sam Zell has been going out and talking about how companies will need liquidity, and liquidity is going to be the most important thing in the next few months. So,
few months.
Could be. He's probably been thinking that for a while as he sits on his pile of cash.
Yeah, true. It's also true.
I was just watching his most recent interview. Jack, you got to figure out how to do a Sam Zell impression. I mean, that would just be gold.
Oh no, I can't. He's got like that kind of a scratchy, raspy. That's the word. I can't do that very well.
Okay.
But yeah, he does have a very distinct voice and persona,
I'd say.
How was that recent interview? I think it popped up in my feed, but I haven't watched it yet.
Yeah, I just started watching it, and then I got entertained by, the way he talks.
Yeah, fair.
I got distracted.
This is a short clip, right?
Yeah, I think maybe it was.
Jack, apparently you look like a young Sam Zell.
Yeah.
What?
You get weird comments. It's like Jack looks like a Christian. Jack looks like a young Sam Zell.
Yeah, right. Yeah, I don't know about that. Wait, can we get a
let's
picture?
Pull up a picture. Yeah, let's get a picture.
I've only seen old Sam Zell, so let's see young Sam Zell.
I don't know that there were cameras when Sam Zell was young.
Is he just like squished? No, he's. I mean, I probably
actually, yeah.
No.
Pull it up.
Well, it's so. I'm trying to find a better quality one. It's like squished.
No, this will work.
You seen the first one? What did you search? Young Sam Zell?
Yeah.
Yeah.
There's one that kind of looks.
Oh yeah, here's one in the desk. Okay, that's not so bad. That's kind of crazy. That doesn't even look like him. Let's see. This one right here.
Oh yeah, I think the pipe look would be good for you, Jack.
Yeah, right.
That is Jack.
I actually
even the first one. Is that him?
Yeah,
the
first
first
one.
It's like kind of squished.
Yeah, still, I see some resemblance there.
It's like a tall, skinny, short-haired.
He's not tall though. He's very short.
Very short, yeah.
He doesn't look that short here though.
Do you know who your father is, Jack?
That's not Sam Zell. No, he's in Chicagoland, so maybe.
He is, yeah. Anyway, we don't have to go down that road.
Well, if Jack's mom's in the chat, can we get some clarification?
Yeah. She was a while back. we were talking about getting I requested that we have all of our moms in the chat at some point, since my mom's obviously game, so we're gonna get all the punch card moms in. And then Tom suggested a wives or girlfriends episode as well. that would be something.
Yeah,
we can get the kids on too. I don't have any kids, but we have some punch card kids.
We sure do. 2 punches.
2 punches. Yeah. So apparently I look like young Sam Zell. All right, sure. If that's telling of anything.
Frank, what's the next company in your newsletter?
Spoiler alert.
I actually haven't started a write-up yet, so I will have one out next month as usual. It won't be at the start of the month, but I was considering doing Opera, which I talked about.
I was going to say
ideas, but Edwin Dorsey actually shared with me this short report that brought up some big concerns with the management there. The 60% owner, or
the big guy,
bigger, the Chinese guy,
Chinese owner.
A lot of really, I don't remember the exact details, but it's a huge short report of lots of little things he's done over time that have been very concerning. So huge red flag there. And I don't know whether it's worth writing about still and just incorporating that risk factor. But it's not as appealing to me as it was last week. Maybe it's cheap enough that it doesn't matter, but
could you elaborate a little bit more? Like what's like the primary concern? If
like fraudulent behavior with some of these positions in Africa, particularly. Yeah. Gotcha. So it's like a big short. It was a popular short stock recently, but yeah, I don't know.
Noted.
It's less appealing to me.
Yeah, and I would definitely, that would be a big red flag for sure.
But the other one I'm thinking about writing up is New Zealand Media Entertainment, the company I own and have for a while now. So I'll probably either do that or a similar company called Seven West that has a similar thesis, at least. Anyway.
Cool.
I think so far, so good on that one.
What's that, Karan?
No, a lot of people in the chat have, I think, been invested in New Zealand media after Frank mentioned it.
I know. I know a few people have for sure.
It's been playing out really well. So part of the additional upside was this deal with Google and Meta that was pretty much just free earnings attached or free cash flow that's going to be added on to the thesis. Margins go up with no CapEx expense or anything. And they've both gone through. So that was just something, a little bonus on top that has come through. So it's working out well. I think this year there will be about 50% growth in free cash flow, about 10% dividend yield, still trades at like a 15 or 20% free cash flow yield as well. So it's been a good one to follow or own anyway.
All right. Go follow Frank on Twitter and Seeking Value, the podcast and the newsletter. Should we wrap it up there, guys? Or any final words? I'll take the silence as no. With that said, thank you everyone for always stopping by and listening to whatever this is. And be sure to like, comment, subscribe, all that great stuff. Check out the things in the description as well. The discounts to Seeking Alpha, discount to ShareSite. We got our merch shop that Karan so graciously runs. Get your Shameless Cloner mugs and other merch, and check out the Discord. And follow us on Twitter. That's the new the hot topic right now. We don't have a punch card account, but we all have individual accounts. So go find us there.
I thought I missed that we started a punch card Twitter. Then I was
no, we don't.
Go follow it.
Should we? Someone's going to take it and squat it, right? But I'm giving people ideas. All right. Till next time, everyone. See ya.